So that's all coming, and that money gets printed, and Bitcoin benefits the most out of all the different risky assets that one could own out there. And that's how we get to $1 million Bitcoin. I think that happens sometime between now and when Trump exits office in 2028. So that's sort of my goal. North Star, this year, I think we get to 250,000 in Bitcoin. Maybe this summer we run to something like 150 to 200,000 before we get some sort of like pullback, right? They set these 90-day targets. Obviously, now you have a strike price, a maturity, an expiry. There's gonna be insane volatility around that. Will they or won't they? What's the deal gonna look like? And obviously, Trump's gonna posture that he's serious about really inflicting some pain on trade partners. So you could see sort of, ditch the bride at the altar negotiating style, where, oh yeah, I was gonna do a deal, but fuck you. I'm going back to maximalist tariffs. Really get whatever he thinks he needs to get out of that negotiation. And we could see some insane volatility around, was it July 4th for everyone except China? And then China's like August 10th, something around there. Mm-hmm. So
Arthur Hayes begins with a serious warning. The money printer is getting hotter once more, and the repercussions might be much more severe. Hayes describes a scenario in which rising debt, political unrest, and central bank intervention come together, drawing on past cycles and present macro signs. However, he is not merely raising concerns. He is also citing decentralized finance, Bitcoin, and gold as lifeboats in the imminent flood of fiat. His observations are a survival manual as much as a market study. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Chimerica, it's time to buy everything. That seems like a pretty good directive to the market. Why is it time to buy everything?
So, obviously we had, Liberation Day and a week of financial, essentially, panic. And in the wake of that, not a capitulation, but a pivot from a maximalist tariff position. Trump said, okay, 90 days and everybody except China. Besson came on TV and said he's got treasury buybacks. I'm going to make sure that the market's well functioning. And that was the bottom of the market. And what's crypto? Bitcoin's up, 35% since then. ETH's up 50%. Pickier, shitcoin, meme coin, all crushing it. NASDAQ up on the year, right? It was down 20% into early April. And now it's up 30% since the day. So the bottom is in. And now we get this, U.S. and China are walking away from trying to impose tariffs on each other. And so I think sort of the meta that America is going to make itself great again using the tool of tariffs, that's over. I think it's going to come down to capital controls, but that's a longer burn issue. But as it portends to risk market, just buy everything, right? The bond market threw a bit of a fit. They pivoted. And we know what happens. The money gets printed. Bitcoin is just a reflection of global liquidity flows. And at the margin, that's the US, right? So what do we know is true about financial policy in the US? Doesn't matter what party is in power, is if the bond market volatility gets to a level, and that level has been empirically seen to be 135 to 140 on the MOVE index, the policy response is immediate, like the same day. What do we have? In April 9th, MOVE was like, I think opened at 130 or 128, whatever it was, got to 172 intraday. Jamie Dimon goes on CNBC saying tariffs are dumb in his Jamie Dimon way. And
which is not to say tariffs are dumb. He just says every other word except for that. Yeah. Politically correct. He says tariffs are dumb.
And, there's a 90-day pause in everybody except China. Besson gets on television a few days later on Bloomberg and says, I've got treasury buybacks. I can, Don't fuck with me. I've got treasury buybacks. Treasury market's sweet. Right?
My guns are loaded.
Market bottoms. And then we rip, right? So, and what happened in September of 2022? Bond market is getting crushed. S&P down 20%. MOVE is at like 140. Yellen or somebody in her staff says, okay, there's $2.5 trillion sitting at the Fed reverse repo. Let's change how we issue our bonds so that we draw that money out. And so she did more bills issuance than bonds issuance. And that sucked $2.5 trillion over 2 years out of the reverse repo at the Fed into the global financial markets, and everything ripped. Stocks, bonds, crypto, gold ripped, right? And so that is the number that we should be focusing on. That is, volatility cannot be in the financial markets when you have so much leverage and everybody's running some sort of carry trade. And so that's why the authorities always step in when the volatility increases in the bond market. And because Bitcoin is literally just a reflection of how many units of fiat are there out there in the world, it goes up the most in price. And that's it. It's just that simple. So I think Trump team is very serious about trying to do their part in rectifying these imbalances. I think capital controls are the way they're going to do it, which is a little bit slower burn. but foreigners are going to react by selling assets because now there's a tax and they don't want to pay it. And so that's going to require printed money to replace those dollars. So if the foreigners aren't going to supply the dollars to levitate treasury market and the stock market and the property market, the US government will supply it via the Fed, the Treasury, and sort of legislative actions that they can do, like Fannie and Freddie being out of conservatorship or stuff like that, right? So that's all coming, and that money gets printed, and Bitcoin benefits the most out of all the different risky assets that one could own out there. And that's how we get to $1 million Bitcoin. I think that happens sometime between now and when Trump exits office in 2028. So that's sort of my goal. North Star, this year, I think we get to 250,000 in Bitcoin. Maybe this summer we run to something like 150 to 200,000 before we get some sort of like pullback, right? They set these 90-day targets. Obviously, now you have a strike price, a maturity, an expiry. There's going to be insane volatility around that. Will they or won't they? What's the deal going to look like? And obviously, Trump's going to posture that he's serious about really inflicting some pain on trade partners. So you could see sort of, ditch the bride at the altar negotiating style where, I was going to do a deal, but fuck you. I'm going back to maximalist tariffs. Really get whatever he thinks he needs to get out of that negotiation. And we could see some insane volatility around, was it July 4th for everyone except China? And then China's like August 10th, something around there. Mm-hmm. So I think now we have those dates in mind. I wouldn't really want to be long. I wouldn't want to be overly long any risky asset, especially around the Chinese X date, because we don't know what's going to happen. I mean, we know eventually they're going to print money and all that kind of stuff, but in the moment, if you're leveraged and you're out over your skis, that can be pretty painful for you.
When discussing the future, Arthur Hayes is direct. He thinks that the financial transition we're about to undergo will dwarf the money printing of the COVID era. The US could actually print even more money than it did during the pandemic, according to Hayes, if Trump is elected president in the future. For what reason? The government is forced to maintain stable markets, high asset prices, and a sizable fiscal deficit. The United States will be forced to pay for its debt on its own, since foreign investors are likely to withdraw as a result of potential capital controls or new taxes. This entails restarting the money printer. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
I don't think if you close your eyes and throw a dart, you should be able to make money. I think, yes, they're going to print a lot of money because this is a global monetary transition. It's going to dwarf what we've seen so far, especially in the COVID era, which was a nutso period for financial markets. Trump and co are going to print more money than Biden did during COVID. That's going to happen. That's
you think
my prediction. And that's how we get to Bitcoin $1 million and S&P 10,000 and gold 15,000 and all these crazy price targets that you wouldn't otherwise expect. No, I think Bitcoin dominance will peak. And obviously that's really a function of ETH and Sol because of Ripple, those are the big assets. If those start outperforming like ETH has in the last week, then Bitcoin dominance mathematically falls. Does that mean that the dog shit altcoin that you own in your portfolio is going to go up? Not necessarily. I think there's going to be a new narrative. I don't know what it's going to be. There'll be a new shiny thing that we all start trading. I'll be trading it for sure. It'll be fun. If it's a coin that's already launched, I think people are getting a lot more discerning, right? We don't want a VC-backed coin with high FTV, low float. That shit is not happening, right? We want to see if you're already launched, where are your clients? Are they paying you in money other than the token that you gave them for farming it? And then if you're making money as a protocol, where's my money as a token holder? I want buybacks. I want staked emissions, whatever it is. Give me that profit back. This is not fucking a go party at Bitcoin Vegas at the club with all my money situation. And so I think those coins, and there's very, very few of them. We really like EtherFi and Pendle for that. In that narrative, we're going to go back to like fundamental season, all about cash flows all the time for anything that's not new. But if you're new, cool. We'll let you get away with like all sorts of fugazi Ponzi-nomics bullshit. Yeah. So essentially they want to trade interest rates embedded in crypto. How they really came into popularity was, okay, let's say that you have a token and this token has some sort of emissions or rewards program. So you have two risks here. You have the risk of the token price, and then you have how much of the rewards you're going to get. And so the thing that Pendle really popularized was separating those two risks. So somebody gets a fixed return token, somebody gets a variable rate return token, where the variable rate is based on the emissions and what the value of those emissions are by the maturity date. And you can trade these two distinct products. And that's what really has powered Pendle. So something like, I think it's like 6 billion TVL, whatever the number is. It's high. It's one of the highest projects out there in the ecosystem. And so they're moving on to, they want to trade now like interest rates, curves. They want to trade sort of funding rates, and all these different things to sort of help the fixed income side of the crypto markets mature. And I'm sure, as a lot of your listeners know, that's the largest trading markets in the world, interest rate swaps and those sorts of things. So if Pendle's able to really dial into that and create a product that us degens can trade and hedge with, then the sky's the limit in terms of the value they're going to create for token holders. And that's why I really love the product. And I think the team behind it, they're really switched on to really going after this massive opportunity to bring fixed income markets on chain and DeFi. And thankfully the tokens got pretty beat up over the last 12 months during this downturn, and has a very attractive entry price in the last downturn. We've been accumulating it. And then on the EtherFi side, they've basically, their goal was to become the American Express of crypto. Well, so what's American Express? It's a charge card for rich people. So what's EtherFi? It's a crypto neobank for rich crypto people. So they have a nice, cool card where you can send stables, you can use your staked ETH, borrow against it, spend against it, and it's using all Visa POS systems, and they're building a whole loan book and sort of just like a financial institution, all on chain. It's already profitable, and they are distributing revenue direct to token holders. So we are advisors on both projects. We're investors on both projects, so kind of mixing in both sort of roles. But if I had to say two projects that epitomize this like return to cash flows fundamental season, it would be those two.
Arthur Hayes provides a clear picture of the direction macroeconomics and cryptocurrency are taking, and it's not business as usual. He thinks Bitcoin might reach its peak soon, not because it's weak, but rather because investors will begin shifting their money to Ethereum, Solana, and possibly other new cryptocurrency stories. Don't count on every random altcoin to succeed, though. Hayes emphasizes that investors are growing more astute and pickier. These days, it's about the basics rather than just hype. According to him, the market is about to enter a new stage where value is derived from actual use cases, income, and cash flows. According to him, by allowing investors to trade fixed and variable returns independently, Pendle, for example, is revolutionizing the market and introducing fixed income products into DeFi. Given that interest rate markets are some of the largest in traditional finance, this is a huge opportunity. Pendle has the potential to unlock amazing value if it can close that gap on chain. He also cautions that the United States is about to undergo a monetary transition that has never been witnessed before. America will probably have to finance its enormous debt internally since foreign capital is drying up as a result of geopolitical tensions and possible capital controls. Consequently, more money will need to be printed. Additionally, Hayes thinks that this money printing might surpass even the pandemic levels under Biden if Trump wins back office. It's required to prevent market crashes, not because it's optional. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.